Hello, it's Rhonda Thomas, and we are about to do the video for Financial Accounting's Chapter 6 coursework. This is involving inventory. So I'm going to go ahead and make the video. All right, so I'm going to share my screen, and you'll see that I am on this problem on the coursework in Cengage. And then I also have my spreadsheet open to show you the calculations. Once again, we're working with inventory, and the main issue with inventory, a couple of things, is what cost flow assumption are they using? Are they using LIFO, FIFO, or weighted average? And are we using perpetual updating or periodic updating? Okay, so the perpetual and the periodic part is how often the balance is updated in the account. Okay, so this first one we're going to do is weighted average perpetual. I think perpetual sometimes is easier to do because it has you keep track. And as you can see, we're going to go through a whole year here of this inventory. Okay. And so here we go. Let's go ahead. So on January 1st, we had inventory, 6,000 units at $42 a piece. Okay. So if you take 6,000 times $42 each, you get 252,000 as the beginning inventory. So you'll always want to start with how much is sitting there. And this is average cost. So because there's not more than one cost sitting there, we're going to sell our first sale, which is April 19th. The first sale we make are coming from those $42 costs. So you don't get a chance to do a weighted average until you have more than one cost. All right, so the first sale is April 19th, 3,750 units at a cost of 42. Okay, so that is 157,500. And when you take 3,750 in units from 6,000 in units, you get a balance of 2,250 units at a cost of 42. And so then the remaining amount is $94,500 worth of inventory. So the good thing about perpetual is that you constantly know how much is in inventory after every sale and after every purchase. Okay, so before we purchase, all right, nope, we're ready to enter our purchase. So June 30th, we're purchasing 6,750 units at a cost of 46. 46 is pretty close to 42. Okay, so $46. Okay, and that is 310,500. Okay, 310,500. Now, before we can put in the average cost, here's what you do. You take what's sitting there, 2,250 units plus 6,750 units. Okay, and you get 9,000 units all together. And then you add the totals together, 94,500 plus 310,500, and you get a total of 405,000. Now you can do your division. When you take this total dollar value and divide by these number of units, you get $45 as the average cost. Okay. I think you're going to have different numbers because I believe this is an algorithm problem. Yes, it is. So you're going to have to do the math that does this. Okay. All right. So now we're ready for another sale. Okay. Now we're ready for a September 2nd sale. Okay. So we have a balance. Okay. So September 2nd, we're selling 7,500 units at a cost of 45. Okay, at a cost of 45. So 7,500 units at 45. I want to make sure my math is correct. Yep. It is 337,500. So what do you have remaining after that sale? We had a balance of 1,500 at a cost of 45. So that's $67,500 after the second sale. Okay, now it's time to make another purchase. So we're purchasing 3,000 units at a cost of 48. Okay, 3,000 units at a cost of 48. And this is November 15th. Okay. Okay, so let me see where I'm at here. Okay, so when we take, all right, so this should be a total cost of 45. Let me go back and make sure I just am trying to be much more careful. Okay, I'm gonna move this over so we can see it. Okay, hold on. There it is. Okay, you have to stretch this one out. So hold on just a second. Let me go back to this. Yes. All right. So I'll try to get this back where it was. Okay. All right. So we're now ready for the purchase on November 15th. Okay. So here it is. Purchase is 3,000 units. Nope. Nope. Okay. Okay. November 15th. And we're buying 3,000 units at 48. Okay, 3,000 units at 48. Okay, so let me put this in here, make sure we have it right. $3,000 units. Okay, so this was that one. All right, this is this line. Now we're buying 3,000 units at 48. Okay, yep. 3,000 units at 48. You have to change your formulas when you're working with this. Okay, so 48 is kind of close to 42, 45. So costs are going up. So 3,000 times 48 is 144,000. Okay, let's see if I've got that right. All right, now it's time to combine these two. So once again, you take the 1,500 here and the 3,000 and you get 4,500 units. And you take the 67,500 plus the total. So if you take the total here and the total here and put its result, okay, so 211,500, and then you're going to divide that number by 4,500 units. So the average cost ends up being $47. Okay, $47. Now we're ready to go ahead and calculate, right? So we need to calculate the cost of goods sold. So you get 157,500 and 337,500. You get 495,000. That is right there. Okay, and then here you're just going to bring down the last entry on November 15th. There's still 4,500 units at an average cost of $47 each. So this now is the balance in inventory, because we didn't sell anymore and we didn't buy anymore from November 15th to the end of the year. So you just simply fill it in, and you can only do that with weighted average. Okay, you just have to be very careful how you're calculating things. All right, let's move on. Okay, so that was weighted average perpetual. Now we're going to do perpetual using FIFO, first in, first out. Okay, first in, first out. And remember, it's first cost in, first cost out. So let's just begin with inventory. That's where we always start. 4,200 at a cost of $41. And that is 172,200. Okay, I've got my information here. Okay, and then and like I said, that's the only cost. That's the only cost. So when you make a sale, if you only have one cost, that's where they come out of. So the cost is, or we're selling 2,500 units at a cost of 41, and that is 102,500. Now we have 1,700 remaining at a $41 cost, 69,700. Okay, so I like using Excel this way because it helps me calculate things more quickly. But if I have to change numbers, sometimes it gets a little confusing trying to video it. All right, so now it's June 30th. We're purchasing 4,300 units at a cost of 44. 44 is $3 more than 41. So that is 189,200. When you add 4,300 to 1,700, you now have six. Be careful, be careful. This is not weighted average. The first thing you do after a purchase is restate your $41 cost. All right, so there it is. Restate it because it's a new day. That last time we put that in, it was April 19th. Now it's June 30th. So you have to restate how much you have in the $41 cost layer. And now here comes the new one, right? 4,300 at 44, 189,200. So once again, this is first in. Which ones were first here? The $41 cost. So the next sale we're going to sell out of, and what I mean is sell from the first tier, that $41 layer first. Okay, so we're going to sell 4,900 units. Well, all 1,700 of that $41 cost is going in that sale. So we don't have any more $41 cost. And then to finish the sale of 4,900 units, right? 4,900 units is the number that we're selling. And this is on September 2nd. So we had June. All right. So then we had 6,000, right? We have 6,000 all together. And then if we're going to sell 4,900, okay, 4,900. So this is on, all right. So if you take 1,700 units plus 3,200 units, there you get your 4,900 units. This this 3,200 units are at the $44 cost. So this is going to be 140,800. Now, we don't have any remaining in inventory of the $41 cost, but we do have some left of the $44 cost. So this is 1,100 units at a $44 cost, and that is 48,400. Okay, let's check our work while we're in this. Once again, this is first costs in, first costs out. So now we're going to purchase some more. Okay, before we purchase, let's go ahead and bring the old layer down. Bring it down because we have to restate it. And now we're ready for November 15th. November 15th, we're purchasing 2,100 units at a cost of 46. That is 96,600 units. And that is what goes in this bottom here. Okay, 2,100 units at a cost of 46, 96,600. And when you add these two together, you get a total in ending inventory. You got to add these two together, 145,000. Okay, 145,000. So there's actually 1,310 units. And I think I've got to add a 0 there. Yeah. So now we have 3,200 units. That's what I have right here at a cost of 145,000. Let's go ahead and check that. And then the last item that we're going to do is add these three together. These are the total cost of goods sold for the year. And I have them right here in these three cells, and that adds up to $313,000. Okay, so this was first in, first out. So the only ones still sitting here are the newest costs. We sent out all of the $41 costs for sale, right? We sent out a few of the $44 cost, but we still have all of the $46 cost in inventory. All right, let's go to the next one. Now here comes LIFO, last in, first out. So we always start each inventory problem with the balance. So the balance is 4,000 units at a $41 cost, $164,000 to begin our problem, begin the year. Okay, so there's no other cost. So we're going to sell out of there 2,500 units at a $41 cost. That's $102,500. Let me double check my math here. Yes. And then that leaves 1,500 units at a $41 cost. So that leaves $61,500 after that first sale. Okay, but now we're going to make another purchase. But before we do, let's restate our last balance in the $41 cost layer. Because now we're going to add another layer of cost. 4,500 units at a cost of 43. Okay, that's pretty close to 41. Okay, that is 193,500 units right here. 4,500 units at $43. Okay, so now we just bring this in as a new layer, 193,500. So now we're getting ready to do our second sale of the year. Second sale of the year is 4,800 units. This is last costs in. What are the last costs in? They're the $43 ones. So we're going to use all of those. Okay. So we don't have to recalculate that math. That's nice. And then we need 300 of the $41 units, 12,300. Now we have none left of the $43 cost, but we do have 1,200 left of the $41 cost. So those $41 costs are still hanging around. All right, now we're going to make a purchase. Before we do, restate the last time, the last layer that was there before we bought this new one. Here comes the new one. We're buying 1,900 units at a cost of 48. Okay, at a cost of 48. That's $91,200. You just bring that down here because you can't combine costs that are different. Okay, you can't because you'll lose how many you have. All right, so now we just simply want to add down here. All right, if they had a place to put how many units, we could, but you have to add those two together. But we want the total dollar value, 140,400, is adding up the balance and then the new purchase balance. And then we want to add up our cost of goods sold. Okay, cost of goods sold. So I'm going to give us just a little more room here. All right, so the cost of goods sold, the first sale, 102,500. The second sale, 193,500, and the second part of the second sale is 12,300. So altogether, our cost of the goods that we sold for the whole year. Okay, let me go ahead and 308,300. Okay, that looks okay. All right. Now here comes the one that I really had troubles with, and we're going to really work on this. Okay, so I'm going to slow down. Seems like sometimes when I'm working on something in class, I lose my focus a lot easier. So we're going to do what's called periodic. Okay, we're going to do what's called periodic. Periodic does not have a balance after every transaction. It waits to see what the balance will be after physical inventory is taken. So periodic, we have FIFO, LIFO, and weighted average. If you have to do all three and you're using a periodic example, I recommend doing the weighted average first. Okay, so let's go ahead and figure out what we have. On January 1st, we have 3,000 units at a cost of $6 each. All right, so we've got 3,000 units times $6. So we start with inventory of $18,000. Then you just simply put in your purchases. The second purchase is for 2,800 units at $7. Okay, 2,800 units at $7. Our second purchase is in July 21st. They used $8 as the cost. So we got 6, 7, and 8. So it's going up a dollar each time. And we have another $2,800 unit, another 2,800 units times 8. Okay, there it is. And then the final purchase was made at $9. There was only 1,400 of them, and 1,400 times 9. All right. So, like I said, we're just getting ready here. Now, the next thing you do is you calculate how many units do we have altogether? Well, 3,000, 2,800, 2,800, and 1,400 is 10,000 units. You add up all of the costs from all four of those items, and we have total available for sale $72,600. Okay, $72,600. We've got to find an average cost. How do you average cost this? You take this total and divide by 10,000. Okay, so one more time. The total dollar value divided by the number available for sale. So it's $726 is the average cost. Then they said we went out and counted on December 31st, and there's 1,700, right? 1,700 items remaining. We had 10,000, now we have 1,700. Well, how many did we sell? Well, if you take 10,000 and you subtract 1,700, you'll see that we sold 8,300 units. Okay, you simply take that times $7.26. So I'm going to put this up here so you can see the math. 8,300 units at 726 is this dollar value here, 60,258. Determine the inventory cost by the weighted average. So inventory cost that is sold going out of there is 60,258. Okay. Now I went ahead and put down what the value will be in the ending inventory too, because I believe 13, and I don't, no, they're not the same. That's okay. That's all right. If they happen to ask, we have 1,700 units at a cost of $7.26. And that means we have an ending inventory of 12,342, but they did not ask that. Okay, here's the good news. I have a check figure here for myself. See, it says check number. If here is your available amount, right? 10,000 units that total 700 or 72,600. Then the amount we sold, the 83 units and the 1,700 units have to add up to 10,000 units, right? Same with the totals for the amount, the value, right? So if we sold $60,258 worth of $7.26 average cost, then these two items must add up to the total available for sale. So I've got this check figure here. And as long as my check figure and my available for sale are the same number, then I should be okay. And we're going to do that every time we use a different cost flow method. So let's check my work. Oh, of course. Okay, let me see what I'm doing. All right. Okay, so okay, let me go back. Okay, so sometimes the language is kind of crazy, but what we're trying to find is determine the inventory cost. This is the ending inventory. If they just would have put ending inventory, that would have been really nice. So what they want is what I have here in green. They want $12,342. So the point of doing all this inventory is to know how much is in inventory so we can report it on the balance sheet. We also need to know how much cost of goods sold is. Okay, so they didn't ask us for cost of goods sold. This would be cost of goods sold if they asked. All right, but they want inventory cost based on weighted average. All right, so now we're going to do FIFO, first in, first out. So we're going to use all this information again, so you don't have to do it again. And now we're not going to use a average cost. First in, first out. So what you're going to do is you're going to see that we know we have 10,000 available for sale. And you divide 72,600 by 10,000. Actually, you don't need to divide. This isn't weighted average. Sorry about that. What I want to explain is there's 1,700 units still in inventory. That means we sold 83 units. Sold 83 units. 8,300 units. Okay. So it doesn't matter. They really want to know how much these 1,700 units that are still in inventory, how much they're worth. Okay, because how many different costs do we have? We have 4 different costs. So how do we know which costs are still in ending inventory? Well, because this is first costs in, first costs out. Okay, I'm going to put first costs in, first costs out. That helps you think about what you're trying to figure out. First costs in, first costs out. Out means sold. Okay, so hopefully that'll help. So once again, we're using our same math here. We're just not doing an average. All right, so let's go ahead and go down here. If we have 1,700 left, what is the 1,700 made up of? Well, if this is first in, first out, then 3,000, the 3,000 units at a cost of 6 they've all been sold. 2,800 of the next cost of 7, they're all sold. And then 2,500 of this layer here at the $8 cost are sold. I went ahead and calculated how much each of those are. So this is the amount that was sold, right? They didn't ask you to solve for that, but they will on the next one. So let's go down here. So the 1,700 that are still in inventory as of December 31st is, let's go ahead and put in this full layer here of $9 cost. So $1,400 is sitting there. I'm sorry, 1,400 units at a cost of $9 a piece, and then 300 units at a cost of $8 a piece. So when you add down, you get inventory cost, and I'm going to put that word there because that's what they're saying. That's the language they're using. Okay. Inventory cost. So this is also ending inventory, right? Ending inventory. That's another word for inventory cost. Ending inventory. Okay, so I can use that also up here. Ending inventory for the average. All right, so this is first in, first out. So the oldest cost, I'm sorry, the newest costs are still in ending inventory. And if costs are going up, that means that FIFO is going to have the most in its ending inventory. So it's going to be 15,000. And if I had a blackboard here, I would put this one in the middle, and then this would be the highest amount of balance in the inventory account. This will be the middle, and then this should be the lowest. Okay, so let's go ahead and do LIFO now. Okay, so same information as before up there, still selling $8,300. Okay, $8,300. Here's 1,700. Well, when they sold 8,300, 1,400 went out the door, 2,800 went out the door, and then however many it took of the $7 cost. So all of these, the only thing that remains is 1,700 of the 3,000 units at $6. So 1,700 at 6, all right, equals $9,600. Okay, so you can see $9,600 should be, let me double check. So we've got 1,700. Nope. And see, I'm glad I checked because that's not correct. 1,700 times 6 is $10,200. So let me put this in and make sure. $10,200. Actually, I need to do the math there. $10,200. Okay, and then now let me double check this one. Okay, so this one shows $308 each. This one shows $1,400 at $9 a piece. So I need to show that differently. Now I can focus a little better. All right, so there you have it. Okay, there you have it. This is the explanation of these totals here. So I feel pretty confident that we're good. All right, now we're going to do this again. Okay, this time we're going to report the cost of the goods that we sold. I wish it was the same problem, but it's not. Actually, we're going to do ending inventory and cost of goods sold, both. So let's go ahead. Periodic with those three methods. All right, so on January 1st, okay, I've got a cost of $130 a piece. So I'm really going to be mindful of what we have. We have 50 units. Okay, so 50 units times $130 gives us a beginning inventory of 6,500. Okay, then on March 10th, we're going to sell. Okay, and like I said, I'm just doing the math here. We're going to sell, the next cost is $138. We have 70 of those. All right, and then I want to make sure we use 108 instead of 110. So that is where you really have to be careful. Okay, then the purchase on the 30th was 30 units. So we're going to change this to 30 units at a cost of $142. So $142. So that's 30 units at $142. And then the last one on December 12th is 50 units at $146. So we go from 130 to 138 to 142 to 146. Now let me do this. Okay, so then 146. So if my math is correct, 50 plus 70 plus 30 plus 50 means we have 200 available to sell for the whole year. Okay, if I did all the math correct here, that should equal 25,620. So knowing what's available, units and dollars then get you to figuring out what the average cost is. Let's see if this makes sense. Okay, so 128.10. Okay, let me double check here where I'm at. 200 units, $128.10. I'm not sure because okay, hang on just a minute and let me back out of this here before I mess something up. So let me go back. All right. So we've got all of those added up. And now I need to one more time make sure all of these, so this should be 50 times 130. Oop. Go 50 times 130. And if you click in the cell, you should be able to see it. Yes, 50 times 130. Enter. Then it should be 70 times 138. Ah, there we have it. 138. Here's how I knew that wasn't right. Because the average cost is not winding up in the middle of these. It's outside of it. So I needed to fix this. Okay. And then now we have 30 at the 142. That seems to be okay. And then we should have 50 at a cost of 146. So I think that's okay. So now I have an average cost of 138.60. Is that in the middle? Well, yes, it's better than the last one. So now that we have an average cost, I'm going to change that average cost to 138.60. Okay, and there are 208. Nope, there are 60 units remaining, right? We have 200 units. There are 60 units. There it is in physical inventory. Okay, so if you have 200 units and you sell six, or you have 60 remaining, that means you sold 140 units at that cost of 138.60. So we're selling 140 units at, once again, 138.60. Okay, 138.60. So let's check my math here. And once again, you should be able to add up these two numbers here. Here's my check figure. Does it come to the total available for sale? Yes. So let me put check figure, check number. Nothing wrong with doing that. That ensures that you've got something that seems to make sense. Now, we want ending inventory, which is right here. That's the 60 units at a cost of 138.60. Okay, so I've got to put that in 138.60. So 83.16. Yeah, 83.16. And then this is, all right. So I believe we're okay. This is going to be weighted average, and that's down here. So the ending inventory, see, at least they put ending inventory this time, which is right here, is 83.16. Whoops. And then the amount that we sold 140 units at that average cost, right? 140 units at that average cost. So that should be 19,404. Okay, that's based on weighted average. Now here comes FIFO. Remember, first costs in, first costs out. And I am going to insert a couple and move it down just a little bit. So we separate it. All right, so we can copy this in. Okay, so I'm going to copy that and bring it down here because it's the same. Yep, it's exactly the same. So we don't have to redo that. That's why I always do weighted average first, because all you have to do is copy this again. You don't have to do all this math over and over and over. Now, we're not looking for a weighted average. Okay, we are not. Okay, so now let's see what we have here, and we have to be careful. So this is first costs in, first costs out. So whatever we sell, these $130 costs are going to go out. So I've got to, it says we have 200, no, it says that we have 60 units available on December 31st. Now I've got to change some numbers here. So 60 units means we sold 140. Now, so I want that to say 140 units, just like this one. All together, 140 units. Now we're not going to put in the cost because we're going to have several layers of cost. So one more time, 200 units when you have 60 remaining means you sold 140. Now I need to change these prices. Okay, the prices are, there are 50 units that we sold, right? There's 70 units. So 50 and 70 are 120, and then an additional 20 units. So there's how many we're selling. Now I've got to change the cost. Okay, the cost. So we got 130, 138, and 142. Okay, so we have, okay, 50 units times the 130. Okay. Right, and then the next one is 70 units at the 138. Okay, and then 20 units at the 142. Okay, now I got to make sure the math works. So now we're going to put 50 units, and this is where we actually make the calculations. 50 units times $130 a piece, $6,500. Then we want 70 units times 138, and then we want 20 units times 142. All right, so there we have it. There's 100 units. Okay, now we're going to come down here. There are 60 units remaining. This is first in, first out. Okay, so we're going to put down, all right, we've got all the units sitting here, the 50 units, so 50 units, okay, 50 units. So that last layer is still sitting here because this is first in, first out. 50 units times 146. Okay, so we're going to do that math. 50 units times 146. Okay, is 7,300 units. 7,300 units. So 50. 50 and 10 is your 60. Let me go ahead and calculate this differently. I know it's going to answer the same, but equals the 50 units that we have here times the last cost, $146. Okay, and then we have 12 units at 142. Okay, that's the third layer. Okay, 20 of them are over here. The other 10 are down here. Okay, so now let's do the math. So we have 12 units at 142. Okay, 142. So I've already seen that here's my check figure. That is not the same as that. So I've got something wrong somewhere. Okay, so let's figure it out. So here is 50 units times 146. That was the last cost. They're still in inventory. Then there are 12. No, okay, so let me fix this. There should be 10 units. There's our problem. 10 units at 142. Okay, there we go. Now those two add up to are available for sale. So now I'm feel much better. So my ending inventory when I use FIFO, 8720. Okay, 8720. And let me get that back. All right, 8720. And then what we sold, right? What we sold is 19,000. All right, we're ready to do LIFO now. Okay, so guess what? We get to use this again. So I'm simply going to copy it and bring it down here, ready for LIFO. Okay, and on December 31st, we have 60 units. Okay, so we're going to get rid of this because we got to put different numbers in. Okay, and this is last in, first out. And we're selling 140 units. Okay, that's how many we're selling. 140 units. If you start with 200 units available for sale and there's still 60 down here, then you sold 140. Okay, so I'm going to put equals 200 minus 60. That is telling me how many I sold. Units sold. Units sold. Okay, so here comes, all right, this, all right, I don't have anything down here, but I will. So if this is last in, first out, all these items here, there are 50 of those, they're going out, 30 of those, they're going out. And this last 60 is going to be made up of all of these 50 here, okay? All of these 50, so you can copy that. Okay, let's go back. Let's copy, maybe. Let's copy this and bring it down. No, I'm just going to put it in here. All right, so we're going to take 50 units times the oldest cost, $130, okay, times $130 each. Okay, there's 50. Now let's do the math. Okay, so 50 units times $130 each, which is the oldest. There is 50 of them. Now we need 10 more. Okay, 10 more. And so 10 units at the next oldest cost. This was the oldest. Now it's $138 is the cost. If you use dollar signs, that helps you remember which is the cost and which are the units. So 10 times 138 is that. All right. So let's see how we're doing here. Now, I didn't even put in how many of what. Here's what I did. So if this is available in total, and then we broke down the amount sitting here, once you know how much is in ending inventory, then what we sold is simply the available for sale minus what's still here in ending inventory becomes the amount that you sold. So you don't have to go through all that. Okay, we could have done that here too, but I wanted to show you that it's made up this way. All right, so the ending inventory for this one is $7,880. Is that 83,116 falls in between there? That's a good sign. And then 19,840. So both of these numbers must add up to the 27,720 that we came up with for all three of these cost flow assumptions. Okay, let's see if we got it right. Okay, now we're going to try to make sense here a little bit of each of these methods, right? So let's try to walk this out. All right, FIFO inventory, first costs in, first costs out. So in each drop down follow, select the correct sign for each comparison. So let's go back. We did a FIFO. FIFO for this problem had 8,720 in ending inventory. LIFO had 7,880. So FIFO is going to result with the same numbers, a larger inventory value at the end than LIFO, because the newest costs are sitting in FIFO in inventory at the end. The oldest costs are sitting in inventory for LIFO. How about the cost of the goods that we sold? So FIFO's cost of goods sold is smaller than LIFO's because they're using the oldest costs first, which are less. Okay, so cost of goods sold is going to be less than. So these are opposite. Okay, these are opposite. So if you're using FIFO, well, just look, here's an example. Here's how much we're selling using LIFO. And then here's how much we're selling using, I said the wrong thing. Here's how much we're selling using FIFO, first in, first out. Here's how much we're selling using LIFO, last in, first out. How about the net income? So if you have a smaller cost of goods sold, then your FIFO income is going to be larger. Yep. And then income tax. Income tax goes up the larger your income is, right? So when this is larger, then income tax is actually larger on FIFO than LIFO. So why would management prefer to use LIFO over FIFO in periods of rising costs? Because income tax shown on the company's tax return would be lower if LIFO rather than FIFO is used. So it's number one. Okay. Once again, here's the proof. When you look here in LIFO, what costs are still sitting here in inventory? They're the $130 cost. Those are the oldest. And so therefore, the costs, hold on. Okay, so one more time, income shown on the company's tax return. So we just determined that the cost of goods sold, if you use FIFO, is smaller than LIFO. Okay, so then the net income is reversed. Net income ends up being larger than if you use LIFO, which means you're going to pay more in taxes than you do using LIFO. Oh my goodness. All right. Next is comparing what's called the lower of cost or market. Now this got pretty confusing. I know. So we're going to try to take it slow and try to do the math. So what you're going to do is we'll use it down here. So all you have to do is repeat everything. So how many do you have? So these items just get repeated right here. That's all you do. So then the extra will be over here. So let's just go ahead and put these in. You do the same. Okay, you're going to probably have different numbers than I do, so be careful. Just repeat what you see up there. Okay, that's what I misled my morning class. So 40 units, our cost is 97. The market value is 98. Have 32 of those. Our cost is 170, but market is 173. 37 of those. 125. Market is 148. So before we do anything else, once again, the reason we do this is we do not want our inventory to become overstated or inflated is the word. So what we have to do is I've got 32 at a cost of 209 and 32 at a cost of 23. So the green that you see here is which one is the lower of the two. All right, and we're just going to use this column right here. Okay, this is based on product. Okay, this is based on product, because then we're going to turn around and do it based on class. Okay, this is by the product, this is by the class, and then this is inventory as a whole. But before we do anything else, let's just go ahead and repeat. Everything we put in up here goes in these boxes, and then we do it again here. Okay, let's just do it. Okay, that way we don't get confused with so many boxes. Okay, so just repeat what your problem says. Okay. for inventory. Somebody has to go out and check these costs in the market. Be a lot easier to do it today than it used to be because you have the internet, right? You could check Amazon, or you could check other places. So 32, 170, 173. And then Model E is 37 units, 125 and 148. Now let's go down and put those in here. And then that way we're ready to go. Doing it one more time. Oops. We have 78. Cost 61. And we have 40, 97, 98, 32, 170, 173, and 37, 125, 148. All right. Let's go now. Now what we're going to do is we're going to do the math. So we take 32 units times our cost, and we get a total. And then we take 32 units times the market. And then we pick which one is lower. Well, our costs are going to be lower. Okay. The only one that they found, so costs are lower here. Costs are not here. So B, we've got more than the market. Okay. And it looks like that's the only one. B is the only one where the market, I guess, is winning. All right. So here comes the total. Okay. You're going to need to do the math for each of yours. I've got mine here. Okay. So I've got $6,688. And the market is $7,136. So then I'm simply going to choose the lower of cost or market. Okay. Now I'm here on B. I've got 10 items at 78 at $780. I've got 10 items at 610. So this time I'm picking 610 because that's the lower of the two. Then Model C has a cost of, we have 40 items in Model C, cost of 97 and a cost of 98. So $3,880 and $3,920. 3,920. Which one's lower? It's the cost we have on our books. Okay. And then Model D, we have 32 of them, and we bought them for $170. And then 173 in the market, and we'll keep our costs. And then the last one, 37 units that cost us $125 a piece. That's $46.25 and $54.76. So we're going to keep $46.25. Now we just add down. Okay, we add down. So here are all my costs. Okay, now the green ones are the ones that are lower. Okay, there was only one that wasn't already our cost, but was the market that was lower. But this is our cost, our cost, our cost, our cost, our cost, and you add it together, and this is $21,413. Okay, same with this number. This number adds up all the market totals. There's only one market total that's lower than the one we had. So this is $22,678. So then when we add the lower of the two, so this one is the cost, the market, the cost, the cost, the cost. Okay, so when you add all those together, 21,678. And this is based on an individual basis. Well, sometimes you don't need to go that far. So let's break it up with a class. Okay, a class. So we already know all these numbers. Okay, we already know all these numbers. We've put them in. In fact, they're showing them to you. Uh-oh, I've got to fix that. Hang on. There's something I missed. So let me see what this is. So I've got 6688, 610, 3880, 5440, and 4625. At 21,243. I may have put that in wrong. I may have. Is that okay now? Yes. I probably miskeyed it. All right, so now we're good. Now we shouldn't have to do any more math as far as the totals, but we might have to for our subtotals. So I'm just going to look up here, $4,100, $3,800. No, this is an example. Sorry, this is an example. Sorry, you can't do that. Got to look up here. Okay, so I've got them over here. 6688, 7136, 780 versus 610, and 3,880, 3,920. Okay, we'll come to those subtotals here in a minute. Now class 2. So they're lumping D and E together. All right, and we have $5,440 versus $5,536. Okay, 4625 and 5476. Let's see if we're right. Okay, before we go any further, let me fix this. See, I transposed this number. It should be 7136. Okay, so I transpose this number. Now, before we do anything else, then now let's put these costs in right here. Okay, so it's just a matter of how you lump them together. All right, so here we go one more time. So 6688, 7136, 780, 610, 3,880, 3920. We've got 5,440, 5536, 4625, and 5476. Okay. All right. So now let's see what I've got up here. All right. This one, this number here is for class. Okay. These are for classes. So let me put classes here. All right. This one is showing the lower of the classes. So our classes are up here. Okay, so the first class, so the first class is, and I'll double check it, is this cost, and this cost added together. So the first three, all right, let me see what I got, 11,348. So then we need to do a total for here, and that's what this one's going to show. Yeah, it's 11,666. Now, then we add those two together. Okay, we add them together. Okay, and that is 23,014. Okay, 23,014. Let's see if we're right. Nope. I forgot. You put the lower of both, right? The lower ends up being the 11,348. See, I'm confusing myself. $11,348. All right. So now we're going to add down for just these two, and that's what this is. Okay, so the first is 10,065 versus the market of $11,012. Which one is lower? The 10,065. Okay, and now we're going to add down. Okay, we're going to add these two together. Cost Okay, so the total cost is what we have here, 21,413, I believe. Let me just see. It's just trying to show you, and I keep this in wrong. Whoa, I got way too many numbers in there. That's what's wrong. Okay, 11,348. And the lower of both of these is 10,665. Okay, what they're trying to show you is these totals down here are the same for here and the same for here. So let's just put them in. Okay, so the total is 21,413. 21,413. Then 22,678. Okay, and when you add these two together, and you're going to have to add this way also. So let me see where this one's going. That is, okay, 22,000, let me see. So 11,000. Okay, that's these two. Okay, this number is 11,348 here plus 10,065. Okay, hold on. 10,065. Making sure that's right. Okay, that is 20. Make sure I'm okay. All right, so the least expensive is 21,413. 21,413. All right, now we're just going to add them all together. Total. So we've already done that once, actually more than once. So let's go ahead and put in what we have here, 21,413. Total for that column is 22,678. And in total, 21,413 is actually the lower of cost or market if you look at the total inventory. So there it is by the item, there it is by the class, and there it is by the total. Okay, I think we got it. Whoo-wee. Let's move on. Okay, here comes a bigger one. This is going to be FIFO and LIFO, and then the weighted average. So we're finished with our periodic, which is good. All right. So now here comes, and this is going to be 61B. All right. So I've got 61A, but we're going to put 61B here. Okay. So we're going to see what we got. 6-1B. Okay. Let's go ahead and calculate our inventory. So I'm going to put this up here and I'm going to make this a little bit smaller so we can, and we're going to go through this pretty quick. So I'm going to show you that, and this is 1B. All right, so here is inventory. Okay, I'm going to show you this. I'm going to take all this out. Okay, and I'm going to show you this based on what we have going on. So we're starting with a beginning balance of 25 units. Okay, 25 units at a cost of $1,200. Okay, $1,200. So we're going to make that happen. And cost of $1,200. Well, guess what? They give us the total. That's nice. So we don't have to do quite so much of the math. Yes, so let's put 30,000 there. Okay, now we're going to go to a purchase. Okay, you say, I thought we were doing perpetual. I know, but just to kind of show you how this works, Okay, so you can see it a little bit different way. The first purchase we make is 75 units at a cost of $12.40. Okay, cost is $12.40. All right, so we can put in that number from the problem. It's $93,000. Okay, then the next purchase is 60 at a cost of $12.60. Okay, so you'll want, at least you'll get to see it, 60 at a cost of $12.60. Okay, and that is $75,600. The next purchase is 80 units at a cost of $12.60. So same price as before. So that was to our benefit, $100,800. And then the fourth purchase, there's 4 purchases in all, 35 units at $12.64. 35 units at $12.64. So they're trying to help you a little bit with not having to do so much of the math. Okay, at $12.64. $12.64. So that is $44,240. If I add up all of my 4 purchases and my beginning balance, okay, all right, we have, all right, so then we'll come back to this. Okay, we'll come back to this because we're going to go through this on perpetual. So let's get started. And this is weighted average. Weighted average. All right, weighted average. And just ignore, I'll go back and fix this stuff as we go. Okay, so we're going to want to keep, see, where am I at? Now, weighted average. Well, so we're going to have to do some math on here with some average costs here. Okay, that's fine. I'm taking this out and that out. I'm taking all of these out so we don't get confused. But this is the reality of what's going on. All right, so I'm also going to bring, I think I've got a copy of this here. Is that this one? 25. Hang on. There it is. There it is. So this is similar. Yep. This is what we want. Okay, this is what we want. So I'm going to bring this up here. Okay, going to bring this up here and we're going to put things in. So our first inventory, we started with 25 units that cost $1,200 a piece. So we started with $30,000 in inventory. We're going to purchase 75 items at a cost of $12.40. So that purchase is $93,000. Okay, so here comes the math. Okay, here comes the math. All right, so 25 and 75 is 100 units, right? 30 and 93,000, right? So let me give myself some space here. Let me insert here. Okay, so here comes some averages. All right, so we're going to take, and I got to add things together. So we've got 100 units to use. Units. And then we got totals here. That's okay. Let's do units here. Units. All right, we're going to line these up better. Okay. Okay, it likes to line up them over there. That's okay. I'm trying to make this look right, and I'm not. You know what? We're just going to use a different, let's just put units. And now let's put 100. Okay, that's fine. I don't even care. So it's lining up numbers differently than letters. That's okay. All right, units, and first one is 100 units. The 100 is actually, that way we know. Okay, I'm going to put the calculation in. So 25 plus 75, right, is 100 units. Yep, 100 units. And we'll change this to dollar, change this just to a number. Just units. All right. And then we'll use our total. So we need total dollars. Okay. So we got to be able to add two amounts together. We've got to be able to add 30,000 plus 93,000. 30,000 plus 93,000. Okay. And these are going to be dollars. I want to make sure they get labeled that way because that helps your brain figure things out. All right, and then here comes the total. So we'll do the total here, and then we'll get an average price or the average cost for this group right here. All right, so, all right, here comes the total dollars. Okay, 123,000 is the dollar value in total. Actually, I want to put that over here. I don't like it over there. All right, this plus this. So once again, I'm going to put 100, and then these two get added up here. 30,000 plus 93,000. There we go. Now we want an average cost. Okay, so I'm going to put average cost. Okay, so this is going to be equals 123,000 divided by the 100. There we go. So 1230 is the average cost, and I'm going to make that happen here. Equals this number divided by this number. Okay, so 1230 is your average cost. And we'll do that every time we need to. Okay, every time we need to. So now here comes the average cost of, so the total is 123,000 when you add the 30,000 and the 93,000 together. And then the average is 1230. Does that seem reasonable? Does that seem reasonable? We had $1,200 units and $140 units. Yes, 1230 is reasonable. Now we're going to sell. Okay, we're going to sell 40 units. So 40 units, and they cost $1,230. Okay, so 40 times $1,230. Okay, 40 times $1,230 is what we want. Now be careful. This is the sales price. 2,000, 2,000, 2,000, 2,000, 2,250, 2,250. So you do have to be careful of what you're using. All right, so the 1,230 is a sale of 40. So I'm going to put sale of 40. Okay, so let's do the total for this. Okay, so that would be 40 units times 1,230. Yep, 49,200. Okay, you have 60 units remaining All right, 60 times 1230. I can just use a calculator if, okay, so I'll just put remain or balance. Okay, balance on the April 11th. Okay. Balance on April 11th is 60 units. Okay, we sold 40. Okay, we sold 40 units, so I got to get rid of that dollar sign. 40 units at a cost of $230. Okay, $230. So the average cost, I'll highlight when we do an average. There it is. Okay, then the balance becomes 60 units at that cost of $1230. So you have, no, this is a number times there 73,800. Okay, you could also just subtract 123,000, subtract 49,200, and there is your cost. That's also going to be the cost of the next sale. So then they turn around and sell, right? They're doing another sale, and this is perpetual, doing another sale of looking here, of 30. Okay, 30 units. Let me get rid of these dollar signs so we don't lose track of what we're doing. Okay, so now a sale is 30 units times the average cost, so 36,000. So 30 units times 1230. You can just use a calculator if you want also. Okay, that leaves us with 30 units at 1230, which leaves us with 36,900. You might check your work now. Okay, check your work. Make sure we're good because we're just about to make another purchase. Okay, now we want to balance. Okay, we want to balance. And we have 30 items that have the same amount. All right, 30 items is 36,900. Now we're buying new. So we're buying 60 units at 1260, and they've done the math for us here. 75,600. Okay. So then we want to take 60, 30 plus 60. So now it's time to do that again. All right, 30 plus 60 is 90. Okay, and then, so we got 90 units now, and then we add the two amounts together. Okay, 36,900 plus 75,600. Here is the total of both of these. Okay, and then here's the new average cost. So we're going to do average cost. We've got a new average cost because we just made another purchase. So our average cost is the 112,500. Okay, we're waiting to find out what that average cost is now. 112,500 divided by 90. It's 1250 now. So 1250 here. All right. So anything we sell now is going to have a cost of 1250 and 1250. Okay, the sale on May 10th. So we got another average cost to put down. Okay. Okay. We'll get rid of this. All right, now we're ready to make a sale. Okay, our sale this time is, okay, we just did purchase of 90. No, purchase of 60. Okay, now we're on 50 and 20. Okay, so our next two sales are going to be 50 and 20. See if I can speed this up. All right, so then 50 times the cost, the new average cost of $12.50 is 62. So we want 50 times $12.50 is 62,500. And that leaves us with 40 units at a $12.50 cost. So we actually have a balance in between there because this is perpetual. Okay, so balance then is 40, right? Equals 90 minus 50. And then 40 times the average cost. So that's $50,000, $50,000. And now we're ready to sell 20. Okay, so now we need a total cost. So 20 items times its new average cost, $25,000. 25,000. So that leaves 20 at a $12.50 cost. So that leaves a $25,000 balance. Let's check our work before we go any further. Yep. Okay, so now we want a balance. So I want to make sure that this is here. Balance is 20 items. Okay, equals 40 minus 20. And then 50,000 minus 25, I know, is 25,000. There's your new balance. Here comes a purchase, right? Here comes a purchase. So we have 20. So the purchase is now 80 at a cost of $12.60. So same cost as before, as a purchase anyway. All right, so that is going to be 100,800. And we just then have 20 plus 80. So we're ready to do this again. So 20 units plus the 80 that we just purchased, right? Which is another 100 again. All right, and then we want the total, which is 25,000 plus the new purchase total. And then we're going to add these together. So I know these are dollars in a row of what shouldn't be dollars. Okay, and now we want a new average cost. Average cost equals 108. Nope, not average cost yet. We got to add those two together. Ugh, boy. All right. So we're going to add these two together. Equals this one plus this one. Okay, so 125,000. Yep, so we've got 100 more now. We have 125,800. Now we need a new average cost. Okay, so average cost is the total divided by 100. Okay, so we've got 1258. So now our next sale is 40 and 25. Okay, so we can go ahead and put in all the next sales. That's fine. 40, 25, and 44. We can even put in that we are going to have the last one be 35 units. I'm kind of going off track here. I'm just trying to get through this a little more quickly for you. All right. So this is 1258 is our new average cost. Okay, let's color that so we know we figured it. Okay. Okay, let's check our work before we go any further. Okay, before we go any further. So we're going to make a sale now of 40 items. So here's a sale of 40 items. So that equals 40 items times 1258. Okay, so that's 50,320. Okay, if you have 100, you sell 40, you have 60 remaining. So the remaining balance after that is 60. So we have 100 and subtract 40. And then we take that times the new average cost. Oh, okay. All right. So then we need to know that is going to be now 75,480. Okay. And then 25 units to be sold is, and then we're going to take equals 25 times this 1258. So that is 31,450, and that leaves 35 at 1258 a piece. So then our balance is, okay, balance is 35. Okay, so this is going to be 4430. Okay, now we're about to do another average. Okay, another average. So moving down. Okay, so we're going to have 35 plus 35. Okay, so we have 35 in inventory plus another 35 we're buying. Okay, so that is 35 plus 35 is 70. Yep, and then we want to take the total of each, so 4430 plus 44,240, and we're going to get a total here of both of these, and then a new average. Okay, new average amount. So put this in. So we've got the total. We're going to divide by 70. So there it is. So now here's the total. 70 items at a new $1,261 average cost, 88,270. Okay, now our final sale. We're going to sell it at that average cost, right, of $1,261. So we've come up with 4 different average costs here, and we're selling. So okay, so 44 items times that new average cost is 55,484. That leaves, okay, so now we have a balance. All right, so we had 70 and we just sold 44. So now we have 26, and the 26 times the cost of 1261. $32,000. So here's what we have remaining. We have 26 remaining at that 1261, 55,000, nope, 32,786. Okay, let's see if we're right. Okay, so now it's time to restate our ending balance. here is what it is. It is the last line. It's 32,786. And now we got to add up all the cost of goods sold. Okay, all the cost of goods sold. So let me go over here and see all the cost of the goods that we sold. So it's all right. I'm just going to put them in right here. So just a second. Insert. All right. So here's our cost of goods sold. Okay, you want to add these all together. Make sure you, every sale that we had. Okay, and I need a little more room. Every sale that we had, 55,484. 1, 2, 3, 4, 5, 6, 7. 1, 2, 3, 4, 5, 6, 7. So at least I know. Now I'm going to do a total. I got 310,854. Let's see if I'm right. Okay. So now we want our total sales. We just found the cost of goods sold, $310,854. The ending inventory, 32,786. Okay, and now total sales. So if I look at this list, let me bring this down over here so I can add it up. You just add up everything that's a sale here. Sales. Okay, so now let me put the sales down. Okay, so a sale, 80,000, 60,000, 100,000, 40,000, 90,000, 56,250, and 99,000. All right, so we have the same number of sales as we have cost of goods sold, so that's a good sign. So we got 525,250. Now we want a gross profit. Okay, gross profit. We want a gross profit equals the sales minus the cost of goods sold in total is 214,396. I think we're good. Okay. All right. Now we're going to do first in, first out. Okay. And I'm just going to use my calculator. Okay. I'm just going to use my calculator here. This is first in, first out. So let's put our inventory, 36 units at a $600 cost. And they are doing the math for us there. That's nice. Here comes a purchase. Okay, with first in, first out, we're going to keep the costs separated. Okay, so before you put this new one, you bring the old one down. Bring it down and repeat. All right, and now you just need to put in your new cost. So what was $600 has now risen to $720. Wow, that's quite a jump. All right, so we've got those numbers figured out. $51,840. Now, this is first in, first out. So we're going to make a sale. Our first sale is 48. Okay, so now we don't have enough in our, so we're going to get rid of all of the first costs. First cost in, first cost sold. So 36,600. That's 21,600. And we're selling 48, right? So 48, we need 12 more. So 12 more at a $720 cost. You can hear my calculator, I think, 86.40. Okay, we don't have any left of the $600 cost. We only have 720. So if you take 12 from 772, you have 60 remaining. 60 times 720, I've got 43,200. Okay, now it's time to make another sale. Okay, now we're going to sell 30. Well, we only have one cost to sell out of. Okay, so that's going to be half of that. Okay, so that's 21,600, and that is what we have remaining. Okay, 21,600. Remember, this is perpetual, so we're going to have a new balance. Okay, we are buying this time 60 at an $800 cost. Okay, 60 at $800 cost, 48,000. Bring the old layer down, the oldest one that's still sitting there. Okay, and just restate it. Now bring your new one in. Okay, and then now we're going to have a sale. Our sale is May 10th. So May 10th, we're selling 36. Well, we don't have enough in our first layer, but we're going to get rid of all of it. Okay, our first layer. And then the next one is 6 more at an $800 cost. So you're looking at 4,800. So you should have 54 remaining at an $800 cost. So 54 times 800 is 43,200. Let's check our work. Okay. All right. And then we have a sale on May 19th. May 19th. So May 19th sale is 18 units at $800. Okay, that's the only one we have. 18 units times 800 is 14,400. So now we had 54 units and we just got rid of 6 and 18. And so there's no more of your 720. So this is all $800 costs. So 54 minus 6 minus 18 is 30 left. 30 left of $800 units. So we're looking at $24,000 there. Yeah. All right. So now we're going to sell. Nope, we're buying more. Okay. So this is the third purchase. The third purchase is 60 at $880. I'm going to go ahead and put in my last purchase will be 108 at $960. So I don't have to scroll back up, and then I can put in what they say it is. So 52,800. And then the last purchase, so you could just go ahead and put all your purchases in there. 103,680. Okay. So now we just bring down the layer that we have remaining and add the new one. 60 units at 880 adds another 52,800. Okay, so now on June 5th, we're going to make a sale of 36. 36, and that's 30. Wait, just a minute. Let me make sure. Okay, so this sale, nope, is 36. Yep, 36 on June 5th. 36. And this is FIFO, first in, first out. I think I got something wrong here. Yep, I do. Just a minute. Let me fix. Just a minute. Nope, 800's okay. It was my number here that I didn't do right. Sorry about that. Okay, so 54 minus 6 minus 18 is 30. Oops, sorry about that. 30. Yeah, is that correct? No. All right, so hang on just a second. What am I thinking? All right, so we've got 54. Oh, that was from the, 60. We just bring this down. Sorry. So this number, you have to be careful. This number is the difference between 60. So if you take 60 and subtract 6, then on May 10th, you have 54. Now we're going to say 54 minus 18. There we go. which is 36. Sorry, 36 times 800 is 28,800. Okay, and now we're ready to buy more. So we just simply repeat that. There we go. That's much better. All right, and now here goes all those 36. So exactly, so we have exactly 60 remaining of the $880 cost after that. And then we're going to make a sale on the 16th of 48 at the $880. So 48 times $880 is $42,240. Okay, and then that means we have 12 remaining at 880 is 10,560. Bring that down before the next purchase. And then the next purchase comes in, and then the final sale. The final sale is 54 units. Okay, final sale. So all of the 12 items at a cost of $880, they're out the door. And then, and once again, it's 54. So then we want 42 units at $960. Okay, so 42 units times 960 is 40,320. All right, now we're ready. We only have the 960 remaining. Okay, we don't have any other layers. And if we take 108 and subtract 42, we get 66. 66 times 960, okay, is 63,360. And that is our ending inventory because we don't have any other cost layers. But we then, okay, let's go ahead and figure what we have here. So I'm going to do pretty much what we did up there. We're going to have cost of goods sold. Okay, and then we're also going to have sales. Okay, because we've got to do some journal entries here. All right, so the cost of goods sold, 21,600, 8,640, 21,600 twice, 4,800, 14,400, 28,800, 42,240, 10,560, 40,320. And I add those up. Let me count them. 3, 6, 9, 10. 3. Okay, let me just count them. And by the way, if you're using Excel, you can just highlight all those and it'll tell you how many you have. Yep. And it'll also give you the sum. But I want you to see it. Okay, so we're going to add all those together. 214,560. All right, let's check our work. See if we got it. Yes. Now we're going to record the sale. Okay, so I've got to put the sales in. Okay, so 96,000, 60,000 should have the same number of sales that we had cost of goods sold. Oh, not necessarily because we had, it's okay, it's all right. So I've got 553,800. So we're going to record the sale in accounts receivable. I don't know if I'm right. I hope I am. And then that's going to be sales. Okay. And then we just found the cost of goods that we sold right there. So there is calculating that instead of waiting for them to tell you what number it is. And that goes down in inventory, right? Yep. So that's the inventory going down by that much as well. Okay, so check the work. I put in the wrong number. All right, 214,560. All right, so now we want a gross profit. Okay, so we want our sales minus our cost of goods sold is 339,240, and the ending inventory is right there. Ending inventory, 63,360. Yep. So based on the preceding data, would you expect the ending inventory if you were using last in, first out to be higher or lower? So this is first in, first out. So the most costly items are still down here, right? Yep. So the ending inventory, if you use LIFO, would be lower, okay? Because it's got older costs sitting there. All right, one more. This is going to be, we're going to do this a little differently. Let's go ahead and start with our inventory. So we got 54 at a cost of $375. Okay, so $20,250. Let's go ahead and put all of our purchases in. 108 units at $450, 48,600. Our purchase on May 8th is 90 units at a $500 cost. Okay, 90 units at a $500 cost, so 45,000. Then the next one is 90 units at a $550 cost. And that is going to be 49,500. And then our last one, our last purchase is 162 items at a $600 cost for $97,200. All right, that's good. We got our, all right, so with last in, first out, when there's not any difference, then you simply, I'm sorry, we just purchased. All right, so we just bring down what we had, just like we did in FIFO. And then we put in the new purchase of the $450 cost. Now we're getting ready to sell. Okay, the first sale is going to be 72 and last in are the first out. Okay, so $72 times 450, okay, is 32,400. So you bring that old layer down, it's going to carry down. And then if you take 108 and subtract 72 from that sale, we now have 36 at a cost of 450. Okay, cost of 450. And then 36 times 450 is 16,200. Okay, now we're ready for another sale. Okay, and we have two layers. Whatever we're going to sell, these 450 items go first. So April 30th is 45 items. So all of those are gone. Okay, and we need 9 more at a cost of 375. Okay, 9 times 375 is 3375. So how many do we have left of the 375? Be careful, we had 54. We're going to subtract 9, so we have 45 remaining at a $375 cost. Okay, so 45 times 375, 16,875. We might check our work. All right, now we're purchasing more. So you simply bring down what you had remaining the last time you did the balance, and you add the new one. So here's the newest costs. They're going to be sold first. Okay, so on May 10th, we're selling 54 items. So we have enough to fulfill that. 54 items times $500 is 27,000. So bring down 45 because we didn't sell out of any of those, but we did sell out of the 90 items. So if you take 90 and subtract 54, you have 36 items at a $500 cost, which is $18,000 for that cost layer. Now we're going to sell on the 19th. We're selling 27 items. There's enough in the $500 cost to do the math there, 13,500. So now we have 36 minus 27 is 9 of, hold on, I just about messed up. Bring bring the old costs down. They haven't moved. Okay, they're still hanging on. 875. But we have 9 left of the $500 cost. Right? So 9 times 5, if my memory's right, $4,500. Okay. Okay, now we're buying some more. Let's bring the oldest down. Now be careful, we're going to get into 3 layers now. There's the $375 cost layer. There is the $500 cost layer. And now what we just bought. Okay, so the good news is whatever we sell next looks like fits completely in that newest layer. So it's going to be out of the 550, right? 550. Okay, and then June 5th, the sale is 54 units. Yep, 54 units times 550 is 29,700. Now bring down. What's the oldest? The 375 is still hanging around. The 9 are still hanging around. And we take 90 minus 54, and we have 36 of the newest cost times 550 is 19,800. Okay. Okay, 19,000. So now, okay, on June 16th, we're going to sell 72. 72. So we're going to take all of this layer. Okay, so just repeat that one in, and the $500 layer. Okay, and now we're selling 72. So now we need 27. 27. Finally, some of those $375 costs are going out. Is 10,125. Now, how many do we have left of the $375 cost? So if you look at 45 minus 27, you have 18 remaining at 375, and that is 6,750. Bring it down before the next purchase. The next purchase is 162 items at a $600 cost, 97,200. On June 28th, we're selling 81. Yep. That's all going to come out of that newest layer. Last in, first out. Okay, so 81 times 162 is 13,122. Bring down the 18 units at 375. We still have some of those. Okay, and that's 6750. And now we have 162 minus 81. Okay, 162 minus 81 leaves us with 81 at, no, something's wrong. Just a minute, just a minute. At the $600 cost. Whoops, see, that would have been wrong. Sorry about that. Let me go back. 81 times 600 is 48,600. Okay, so then that leaves us with 48,600, but we've got to add these two to get a total. So 48,600 plus 6,750 is 55,350. That's how much ending inventory is. So put that in here. Then we're going to add up all of our cost of goods sold. Okay, and then we'll add up our, okay, so I'm going to just do that here. I'm just going to do it again. All right, so here we go. Cost of goods sold, 32,400, 16,200, $3,375, $27,000, $13,500, $29,700, $19,800, $4,500, $10,125, $48,600. Okay, so I got $553,800. Let's see if I'm right. Nope. So I miskeyed something somewhere. Let's try it again. That's why it's nice to have it already here. 32,400, 16,200, 3,375, 27,000, 13,500, 29,700, 19,800, 4,500, 10,125, 48,600. I must have not had them all in the formula. So let's try it again. Okay. All right. 200. Yeah. Woo. All right. 205,200. Okay. Now let's try it. Yes. There we have it. Okay. We got to run the sales again. So let's put this in 205,200. Okay. So now I'm going to key in the sales. Okay. So here we go. 90,000. And I'm looking at over here, right? 56,250. You would want to do the same thing. 67,500, 33,750, $71,010, 94,680, and 106,515. I'll get rid of that. And now let's go up here, and so 519,705. 519,705. Okay, and then I just want the gross profit. Okay, gross profit. Take the sales and subtract the cost of goods sold. You get 314,505. Okay, let's see if we're right. Yep, we are. All right, that finishes us up. I did every stinking one with you. So hopefully you've caught on how this works a little bit. All right, I'm going to say goodbye for now. So I'm going to stop my share. And glad you hung in there. Keep doing so. It'll prove to be worth it. Thanks for joining me. See you next video.